Hey guys, so I want to take another look at Algorand. The ticker for this is ALGO, ALGO, and I'm currently on the weekly time frame. Now I did my first analysis of this coin probably about a week ago, and it's one of my most popular videos. So I guess there's a lot of interest in this particular coin. So I'm going to take another look at it. Not much has changed, obviously, especially on the long-term time frame here. So basically, we have our low here, and then we had like obviously a massive bull run, and then we just had a huge retrace all the way down to the low. And that's where this coin differs from a lot of the other coins. Like for example, the other coins, they'll have the highs from the bull run, and then I would, for most of them, I can take a Fibonacci and I can just kind of like drop from the bottom to the top, and that will show me the levels of support. But a lot of them are getting supported at the 618, the 786. They didn't make it all the way back down to the start. So I think someone mentioned that the developers were unloading a lot of tokens or something like that. But yeah, I don't know how it made it all the way back down here. Normally, that's a sign of weakness. But from what I hear from you guys, this project is still going strong and it has a lot of partnerships and like a lot of use cases and stuff like that. So, I mean, not to give financial advice, but if you believe in the fundamentals of this coin, buying down here at this range, it's probably not a bad idea. And I mean that for the long term. Now, in the short term, like if I was just, if I had a trading balance and I was just looking for coins to trade, would this be my go-to? Not yet, and I'll tell you why. If I take this down to the daily time frame, like if I was to look for a long position on this coin with my trading balance, if I just wanted to get in and out of trades and not have to hold it for another year and a half to see a good return on it, I would not enter a long. I would not enter a long on the daily until this level broke. Like once this daily downtrend breaks to the upside, that's my cue to take more long positions, right? And then obviously if this level broke, I would first target this range right here. So I'll just draw that for you so you can get a visual here. Right here is likely going to provide a little bit of resistance. And depending on when this level breaks, say for example, we just kind of range here in this very tight range for a little while, break out, and then by the time we make it up here, it also aligns, like this horizontal line lines up with this downsloping resistance line, then that would be a great opportunity for me, not you, I'm not giving financial advice, to enter a short position. And not because I don't think it's going to go higher, but I think, the first time the price gets to this range, a lot of sellers are going to step in and now they'll look to short and just put a stop loss right above here. So that's a potential trade that I might look to take when and if we make it back up here. I think it's just inevitable that we do. I'm just not sure when this is going to break out. Now, if we start closing a daily candle body below this range right here, which is around 10 cents, 10.5 cents, that would be a big sign of weakness for me, and maybe I'll look to the lower levels down here. But until then, there's nothing really to worry about. But yeah, guys, if you're trading this asset, I highly recommend that you draw this downsloping resistance line, because we have 1, 2, 3, 4, 5, 6, 7, like so many touches. This is clearly a significant level. This breaks, I would look up to here, and then obviously if this larger resistance level broke here, that like if this level broke, this horizontal and this downsloping level of resistance, that's your cue to maybe get in for like more swing trade positions, and that would give you a much higher upside, right? And then from there, if you want to identify the targets, of course, you could just like look manually at the price action, look left. And then, so just to give you an example, you guys can go through and do this yourself, but I'll take a horizontal line in. Obviously right here is going to be a level, right? So right there. You see how it was support here for so long? Then we broke down below it, and then we came up and got rejected there. So just basic price action trading, that's going to be a very important level to watch. And then you can look left and you can say, okay, what other levels are going to be important? So you can, maybe right here is going to be a significant level. And then what you do is you take a Fibonacci retracement, you draw from the top, drag it down to the bottom, the swing high to the swing low. And then you want to see like, okay, do any of the the lines that you drew from the visual price action line up with the Fibonacci level. So for example, right here would be one, okay? So you see how this level right here, yeah, I'll do it again, I'll show you, this 618. So you see how right here, this particular level served as a support. So the price bounced off of it for a few months right here, and on the way down, it served as a level of support, and we eventually broke it, and then we came back to retest it, got rejected, and came down. So obviously when the price comes back up to the 618, this level lines up with the price action, but it also lines up perfectly with the 618 kind of golden pocket retracement level. So look to this level as well to provide a lot of resistance, but I mean, that's far off. That's almost 80 cents, right? But yeah, that's basically how I do it. Okay, so let's say if we wanted to take a trade on this asset on a shorter time frame. Let's take a look at that. I'll change the chart here. And when I'm looking for these kind of short-term trades, I like to trade oftentimes between the previous day low and the previous day high. But I'll also look left, and I'll make sure that these levels kind of line up with clusters of support and resistance right here. So, you know, I'm not seeing any trade that I would want to personally take right now. Hold on, let me see how this looks. Yeah, okay. Yeah, I guess I would just have to be patient. I would just have to be patient right now. If I entered this trade at the current price level, the trade would look like this. It would be a 1 to 1.86 risk reward ratio. I would risk just under 2%, so 1.96% to get 3.64% to the upside. And that's just me basically entering where the price currently is, placing my stop loss below this level. So it would be below this this wick and the previous day low. That's where I would place my stop, and then I would just target the previous day high, which would be this range right here. So it kind of lines up with the price action. Almost, I mean, it's okay. It's an okay trade. Ideally would be if the price came back down here, and then I can just get a better entry. If I was to enter here, then I would only have to risk, 0.85%, not even 1%, to get 4.82% to the upside, which would be a risk reward ratio of 1 to 5.67, which would be much more ideal, right? That's normally the trade entries I look for. But yeah, I mean, not much has changed since the last video I did. We are obviously this pattern here. It's just a falling wedge, right? Descending wedge. It could be drawn in a few different ways, but this is the way I chose to draw it, just because this has the most touches on the trend line. I guess you can go like this if you wanted to make it a little bit narrower, right? And that would give you a more of falling wedge appearance. But no, I'm gonna stick with the original that I drew here and keep it like that. But yeah, guys. So I mean, a break below here, a break below this previous low would be, I mean, not good for this asset at all. That'd be a really bad sign. But until that happens, there's no reason to kind of suspect that it's going to happen. Right now, we seem to be forming a little bit of a base. But I mean, definitely, if you're going to trade this, you want to mark this level, and then do not get too excited unless this level breaks to the upside, right? And then you can target these upper regions. And this, I mean, I don't think I did it, but just to give you an example trade setup here. So say we entered a long, right? Say we entered a long. So if the price ended up breaking this downsloping level of resistance and closing a daily candle above it with a retest, let's say theoretically I entered right here, like that's where we got the retest candle. I would enter right here. I would place my stop below this low right here. I could even probably stick it right there, so wouldn't have to risk as much. That would give me a risk reward ratio of almost 1 to 2. So, I'd have to risk a little over 10% to get 20% to the upside. Not really ideal. That's why I mentioned this in other videos. I like to look at the longer time frames, the weekly, the daily, even the monthly, to get a feel for what's like the big picture, what's going on, where we are in terms of, are we near a support, are we near resistance? Do I think based on the longer term time frame, is the price going to go up or down? And then I will look for those trades on a shorter time frame, right? So for example, if I'm looking on the daily and I see a daily candle close above this downsloping level of resistance, then what I would do, I would dial it down to the daily time frame, and I would look for longs on, sorry, not the daily. I would switch to the hourly time frame, or even the 15-minute, 4-hour, and I would just look for longs. I would prioritize longs over shorts if that happened, because the longer term chart is indicating that the price is likely to go up, right? And likewise, if the price came up here on the daily time frame, like right at this resistance level, then I'm going to go to the shorter time frame and I'm going to look for short entries, right? I'm going to bet that the price is going to go down. But you always have to keep in mind what's happening on the higher time frames for your lower time frame entries, right? Now that's not to say that if you know the long-term one is bullish, that you can't take quick shorts on the smaller time frames. You can, but just be very conservative and just assume that the price is going to make its way higher and higher. So those are going to be counter trend trades, and they're fine, but you need to just get in and out really quick with a tight stop loss, right? Anyway, so that's Algorand. And I don't know if I mentioned this or not. I should probably say this at the start of the video, but if you're not subscribed and you want to get more of these updates, you should subscribe, click the bell, and then click on all, because this is a new channel. I'm still under 500 subscribers. And because of that, you know, when you search up various coins in the search engine, this channel doesn't get prioritized. So if you're not subscribed and you click away, you might not be able to find this channel again in the future. So anyway, hope that helps, and have a good day. Bye.